Hey everyone, this is Tim Knight, Slope of Hope, and I wanted to do my kind of lazy man's review here with ETFs in a minute. I wanted to start off just by talking about the ES as a lead in. And anybody who's been following me even a little bit in my posts and comments knows kind of where my head's been at. Um, the plunge we saw here from Jan 19 to Feb 5 was wonderful, and what was very unwonderful was dealing with this very swift, very significant pushback higher, uh, recapturing about 70% of the plunge. And so that was very, very damaging to my portfolio and my psyche. So all the gains that I made on that plunge just evaporated. Um, it really stung for a couple of reasons. One, it stung because it never feels good to see a profit disappear. It hurt extra bad because those profits that were enjoyed from this 100% plunge were lost on merely a 70% retracement. So that stings extra bad. So really, as of a couple of days ago, the psychology I was entering into the market with was an ugly one, which was basically wanting to capture basically any profits that could be had. And that's dangerous because that can cause one to set aside the discipline that's really more prudent to use in a market. But the fact is that there are times when it's good to, for one's psyche, for one's confidence, for one's clear thinking, to basically get some profits under your belt, get things squared around again, and basically shake off the the trauma. And that happily has happened in a very short amount of time, basically a little bit yesterday and definitely today. And I covered a number of very large shorts, banked some nice profits, still have a bunch of shorts, but A, am in a better position than I was, and B, am not nearly as vulnerable to any sort of push higher. Well, where do we stand now, and why did I decide that today was a good time to lighten up? A couple of reasons. One, we were back at the 50% level of that range, which has represented some areas of confluence for prices. And two, this line right here, which really represents the upper portion of this wedge down there, was retraced. And so for those reasons, I felt that it was a propitious time to go ahead and take those profits out. I actually was sort of bracing myself for a push as high as 1125. I'm not disappointed to say we didn't get that high. And so what's next? Hard to say, as always. I think that this zone here represents somewhat important resistance. I wouldn't be shocked if we pushed 5 to 10 points higher. I would be alarmed if we started moving past 1110 with any sort of alacrity. Just as plausible, I think, is puncturing through this trend line. And that raises up a whole other question about, well, how long do you hold on then? As I'm blathering here, it's starting to occur to me, I'm not going to be able to see many ETFs, but anyway, the channel that we were in was sort of kind of like that. I just drew that real quick, and so were we to continue to fall, I guess around 1080, I would get more aggressive myself about covering some of these shorts. Now, these little piddling drops here are not the sort of rock'em sock'em bear market that we've been talking about, but we have to get there in stages. And the way the market's whipping up and down, I simply would rather bank profits quickly than just hang on for gigantic drops. I'm always happy to have a core of shorts with increasingly tight stops to participate in that. But as far as large positions, I'm going to be a little more nimble. I just got to be. But the zone we're clamoring around here, which is kind of 1040 to 1110, that area, there's a lot of junk in there. And I do think that perhaps sometime in March, we will make another robust and meaty plunge down to maybe close to 1,000. Hard to say. I've made some projections. You can look in the big picture thing about kind of where I see things going. As far as like the Dow, I think I'd say something like 96.42, or there was some figure there somewhat below the prior low. But at the risk of repeating myself too often, 2008, year of the bear, 2009, year of the bull, 2010, year of the trader, I suppose, year of the very nimble trader. Because if you're not nimble, you will just go through the agonizing frustration that I have been experiencing. So, with merely 3.5 minutes left, let's just touch on a few ETFs. I think this triple one right here nicely captures the precarious nature of the market right now. You can see a very evident dome top here, and this kind of thing I could see easily going to like 40 or so. I actually tried to see if there was any to short of this just for the heck of it, but naturally there's not. These kind of triple ETFs have been just gobbled up. I mentioned DBA earlier today, a commodity play. This was really wonderful. This is God bless it. This is such a nice, clean technical play. There's a trend line right there. Couldn't be cleaner. The retracement to it, absolutely marvelous right there. And then away we go. Clean, terrific trade. And happily something like this doesn't move 15% overnight, so you can take on a very large position without having 20 heart attacks when you turn on your screen. So it looks boring, looks dull, but that was a really clean trade. I like DBA. I wanted to short this one, but my broker, who usually has everything to short, didn't have a share, and that's kind of a shame because that also was a marvelously clean ETF to short. I think it's got plenty of downside to go, but I can't find any, so no joy there. It's just kind of fun to watch on the sideline. Diamonds, this is probably one of my more favorite ETFs as far as the indexes go. I think that we've got a very clean stop here at 104.40. You can see just how far and how quickly we've come, and it seems to me that this is a profoundly vulnerable index right now. As I said earlier, I could see this falling to like 96, 97 or thereabouts. That's a good 5 or 6, even 7%. So on a really large position, that could be interesting. Gosh, we're probably not going to get past even the G's at this point. Let me just kind of bump ahead real quick. EDC, that actually was the one I was seeing if I could short, because that's even prettier than the one I was looking at earlier. This is just a gorgeous topping pattern, moving down nearly 7% today alone. That is just poetry in motion to a bear's eyes, and I could envision that getting into the 70s quite easily. Wish I could find some to short, but I can't. EEM and EFA, I've been playing with those recently. Those are fun Europe centric shorts right there, and very heavily traded. And I guess the last one I'll show super quick is GDX. Gold is a bit more of a mystery. I think that that's still an awfully clean looking short. I covered that position today, but it's still an enticing pattern. But I've kind of set silver and gold aside for the moment, because for me kind of the easy money was made. But I still consider precious metals rather vulnerable if you look at those patterns there. It is always amazing to me how quick this 10 minutes goes. Shame on YouTube. Give me a 30-minute video, will you guys? Anyway, that's it for me. Great day, and let's just keep at it. Good night.